Good afternoon, distinguished members of YASET. Welcome to our webinar on Insights into World's Insurance and Pension Markets Latest Trends. I'm Serkan Valandova, Secretary General of International Investors Association YASET, and I'm honored to be your host today. In this rapidly evolving world, the insurance and pension industries have been crucial for ensuring economic stability and financial security. We've all experienced this so far. And this webinar aims to provide you with an overview of the latest trends and developments in these markets, both at global sense and at Turkey's level. So today we have an excellent team who are experts in their field, and I'm confident that the information they will provide will share insightful event to you, and it will be thought-provoking at the same time. We'll first hear from Mr. Roma Depalan, who will share two presentations on global insurance market trends and pension markets in focus, followed by a Q&A session. Mr. Depalan has been working in the OECD Directorate for Financial Enterprise Affairs since 2012, where he is in charge of managing statistical projects related to private pensions and insurance. And prior to OECD, he worked on health statistics in the public and private sectors, and he will exchange vast amount of experience and information in today's sessions with us. And Mr. Depalan is also the author of two reports that he will share today in his presentation with us. And our own Ersin Bey will be with us today, the chairperson of our insurance and private pension working group, who works as a CFO at Allianz, and he's going to run the first Q&A session with us. Thank you very much for this one, and we would also be happy to hear his comments and remarks on topics we are visiting today and their reflections on Turkey. And finally, we will have Ms. Ayşegül Düşündere. You know her very well. Ayşegül is the Director of Economic Research at YASET, and she is also coordinating the works of Insurance and Private Pensions Working Group. She will be informing us about the agenda of the working group and with the most recent updates that we are dealing with. Without further ado, let's get started with our first speaker. I will first welcome all. Thank you very much for being with us today, and thank you very much for all your contributions so far to the agenda of our working group. And Mr. Depalan is going to start with his presentation on the global insurance market trends in 2022. Thank you for being with us, Roman, and the floor is yours.
Hello, everyone. Thank you very much to the International Investor Association for the invitation today to this webinar. I'm delighted to present two of our statistical reports on insurance and private pension, respectively. I'm going to start first by the report on insurance markets, the Global Insurance Market Trends 2022. I have some slides. Here they are. Next slide, please. And I will quickly just give you a snapshot of the outline of my first presentation today. I will first give some background around this work. My second part will be dedicated to the main result of the latest edition of the Global Insurance Market Trends. My third section will be about where you can find all our insurance statistics. And finally, I will mention other pieces of work of the insurance team that may be of your interest. Next slide, please. Next slide again. Next slide. Perfect. So first, this work is undertaken under the aegis of the OECD Insurance and Private Pensions Committee. Do you know that it's one of the first committee of the OECD? It was created in 1961, and it gathers insurance regulators and supervisors, as well as ministry of OECD countries. They meet twice a year, and the mandate of this committee is to promote fair, efficient, open, and sound market-oriented insurance and private pension system, based on high level of transparency, confidence, and integrity, and respecting recognized social objectives of this system. This Insurance and Private Pension Committee has several activities, and the monitoring and surveillance of insurance markets is one of them, along with policy analysis, standard setting in the insurance field, and global dialogue within OECD member countries and beyond this area. To carry out its work, the Insurance and Private Pensions Committee has a sub-body called the Task Force on Insurance Statistics to discuss specific issues related to insurance statistics. Next slide, please. For its monitoring activity, the Insurance and Private Pensions Committee has developed a statistical exercise, the Global Insurance Statistics, in the early 1980s. So we have now close to around 40 years of data. Our data cover around 60 jurisdictions worldwide, all OECD countries, many Latin American countries, thanks to our collaboration with the Association of Latin American Insurance Supervisors. And we also have selected other jurisdictions from Asia and Africa, thanks to events that we have organized in the region. We collect a various set of information on various aspects of the insurance industry. Just to give you a few examples, we collect information on the premiums returns, the claim payments, the operating expenses, the commission, the asset allocation, and so on. And we request this information by type of undertaking. So whether this value refer to domestic undertakings or branches and agencies of foreign undertakings. We also ask the information broken down by type of activity, whether the undertaking is carrying out life insurance, non-life insurance, or both. And finally, we also ask a breakdown on the location of activities, whether it's domestic or abroad. Next slide, please. We collect our data in a two-stage process. We first, in March, April of a given year, let's say N, collect preliminary data on domestic companies only for the previous year, N-1. And for key variables, we analyze this data, present them at our meetings with national authorities in June, and release this data in July. These data are usually based on quarterly reporting of domestic undertakings and are preliminary. At the same time, we conduct a more thorough collection of information from May of the year end onwards, and we collect data on domestic undertakings plus branches and agencies of foreign undertakings, and on more variables. This process is more lengthy because to collect data on cross-border activities, this necessitates sometimes the cooperation between different insurance supervisors. But we come with results and a draft report in December of the year N, and we usually release this report afterwards in the year N+1. This is why today, in early 2023, I'm going to talk about 2021 trends, but we are currently collecting 2022 data. Next slide, please. So now I'm going to present you, as I was saying before, so 2021 results that we publish in our latest edition of Global Insurance Market Trends. To summarize very quickly, the scope of the report is all undertakings whenever possible, domestic undertakings and branches and agencies of foreign undertakings. We cover the direct business of this company only and not the reinsurance activity. And we focus on the business return in the reporting countries. So for instance, in the case of Turkey, all the activities written in Turkey, whether the company was a Turkish one or a branch or an agency of a foreign undertaking. The report is articulated around three main themes: the underwriting performance of insurers, their investment performance, and their profitability. Next slide, please. As you know, one of the information that is important to measure the underwriting performance of insurers is the premium, their rights. And this is what we look at in our report. We look at premium growth rates. And what we noticed in 2021 was a rebound on average in premiums written after what happened in 2020. And this rebound was especially pronounced in the life insurance industry, with a 7.7% growth in 2021 after a slowdown of -3% in 2020. In the non-life sector as well, premium grew by 2.5% on average in 2021, which is more than in 2020, but still slightly below the trend before the pandemic. And all these numbers are given in real terms. Next slide, please. The rates I've just given you are averages across around 50 jurisdictions, and this average hide a wide range of disparities of trends across jurisdiction. You can see, for instance, circled in red Turkey, where in fact, in real terms, premiums decline in both the life and non-life insurance sector. But this result is because these trends are in real terms, because in nominal terms, without taking into account inflation, premiums would have been seen as increasing. Overall, there was an increase in premiums that was due to a demand for insurance policy that was higher in 2021. One of the reasons is the lifting of COVID-19 restrictions. This boosted, for instance, the demand for motor vehicle insurance as the sales of car resumed. But also the distribution of insurance policy was facilitated as the stay-at-home measures were lifted. And this is especially relevant in some countries and some lines of business, like for instance in Luxembourg for the distribution of life insurance products. And this is why in the chart you see the growth rate of premiums in Luxembourg was so high in the life sector in 2021. Another explaining factor was the recovery of stock markets. Stock markets fared well in 2021, and that spurred the demand for some life investment products like unit-linked products in some countries. Another factor was the economic recovery and the growth in terms of employment rate in 2021 that led to an increased demand for some policy. Some country mentioned, for instance, an increased interest in group and health insurance in 2021. And finally, in 2021, the COVID has probably also increased people's awareness of the need of some insurance policy like health insurance. Finally, as I said at the beginning of this slide, there are wide disparities across countries. Some of them could simply be due to country-specific reforms happening in the insurance sector. Other things that can play a role in this trend is the change in national reporting, in the accounting, some market entry, like in Finland, for instance, with the entry of a mutual insurer for liability insurance, or some exit from the market, like in Switzerland, where a life insurer exited the market of occupational pensions in 2021. Next slide, please. We also looked in our report at the claim developments, and in particular, the trends in terms of payouts. In the life sector, payouts are typically triggered when a contract matures, when customers pass away, or when they surrender their policies. And what we noticed in 2021 that there was a rise in the payouts in most jurisdictions. And the largest rise, which you can see on this slide, happened in Latin America. For instance, in Paraguay, there was a more than 100% increase in real terms. In Bolivia, there was a close to 80% increase. The next country is Honduras, Colombia. You can see many Latin American countries. And that was due to COVID-19 that had a particular impact, stronger in 2021 than in 2020 in these countries. You can see in this slide as well that in some jurisdictions, the payouts in the life sector declined in 2021. And this could be due to fewer surrenders of policy, like in Finland or Luxembourg, or business transfer that happened in 2020, for instance, in Australia. And so payouts went down in 2021. Another reason for the decline could be inflation, because as I said, these rates are given in real terms. And in Turkey, inflation, which was the highest among OECD countries, outpaced the rise in payouts of claims in the life sector. Next slide, please. In the non-life sector, the picture is a bit mixed because you can see that there is nearly half of the country where there was a decline in claim payment in 2021, and in the other half there was an increase. When the payments decline the most, that was usually because of a lower incidence of natural disasters that happened in 2021 compared to 2020. That's typically the case of Honduras at the bottom of this slide, because Honduras and other Central American countries were particularly hit by two severe hurricanes in 2020, Eta and Iota. This doesn't mean that 2021 was free from natural disaster events. It's the opposite. Munich Re, for instance, assessed that there were higher losses from natural disaster in 2021 than in 2020, but it has affected some other regions than in 2020. For instance, in Belgium, the country suffered floods in 2021 that led to a surge in payment, and this is why you can see Belgium at the top of this chart. Another reason for all the countries where you can see an increase in payments, but also for some of them, is that for some lines of business, there was a return in 2021 to pre-pandemic experiences for some lines. And I'm thinking in particular of the motor vehicle insurance line, because people were using their car more, which could, of course, trigger more accidents than in 2020. Overall, we touch upon in our report about COVID-19 and its effect across lines of business, and we say that it continued to have an effect in 2021 in some countries for some lines of business in terms of claim payments, in particular health insurance in Latin American countries. Overall, we cite an analysis in our report that assess the overall losses for insurers due to COVID of more than $35 billion losses for insurers in 2020 and most of 2021. But what can be said about COVID was, while in 2020 there was some uncertainties for some insurers about their obligation towards their policy holders, because some of the policy wordings were unclear whether, for instance, business interruptions would be covered or not by insurers. And this lack of clarity in 2020 led some insurers to put aside reserves, like in Australia, to be able to face potential payments. In 2021, there was much more clarity. Some courts had given their views, and this is why in Australia the amount of reserves really declined in 2021. Next slide, please. I was saying that we looked at our report at the underwriting performance. Of course, this depends on premiums and claim payments. The indicator we chose was the combined ratio. It's the sum of the loss ratio and the expense ratio. The loss ratio is basically the ratio of claims over premiums, and the expense ratio is the sum of operating expenses and commission over premiums, as we calculated it. And when you add the two, if you get a ratio over 100%, it means that the payments of insurers exceeded the premiums they earned. We calculated this indicator for non-life insurers because this indicator is more meaningful in that type of business, but for life insurers, where the payments are over a longer term horizon than life insurers, which have shorter horizons. And what you can see about this combined ratio is that it was below 100% in 2021 in most jurisdictions. That means that insurers achieved underwriting gains in most jurisdictions. The loss ratio makes up most of the combined ratio. And we also notice, and it was not surprising because it was the same picture as for claims, that the worsening of the combined ratio happened in nearly half of the jurisdiction, and the other half experienced an improvement by contrast. Next slide, please. We also looked at the investment performance of insurers in 2021, which of course depend on their asset allocation. And as you know very well, bonds represent the main instrument in the portfolio of insurers, especially in companies having a life operation like life insurers and composite insurers, because these insurers need stable source of income to pay their payments and their to cover their liabilities. But the thing is, in 2021, inflation was already on the rise. Some were already expecting an increase in interest rates and government bond yields, and this affects the value of fixed income instruments. And for this reason, some jurisdictions like Malaysia already observed a shift from some insurers towards bonds with shorter maturity to minimize mark-to-market losses in 2021. Next slide, please. So we observed in 2021 in most jurisdictions negative real investment rates of return despite buoyant stock markets, and a lower performance than in 2020. And this was probably due to the unrealized losses on the bonds that insurers held in their portfolio in 2021. Next slide, please. The overall 2021 still remained a profitable year for insurers. Despite these investment losses, they managed to get a positive net income, and Turkey was no exception to that. But the profits were lower in 2021 because of this lower investment performance compared to 2020 and lower underwriting gains in some lines of business. Next slide, please. We finally looked in our report in the evolution of the shareholder equity of insurers, which increases in many cases in 2021, but this increase was slower than in 2020, where many supervisors, like in Europe, advise insurers to withhold dividend distributions in case they need capital because of COVID crisis. Next slide, please. Even if, as I said at the very beginning of this presentation, we don't have 2022 data yet, we anticipated in our report some challenges and opportunities ahead for insurers because of a changing macroeconomic environment. Inflation continued to rise in 2022, further fueled by the war in Ukraine, and interest rates have been rising as central banks have tried to curb the rising inflation. And this creates challenges for insurers with a potential rise in claim costs, which we'll try to see if it happened or not when we have the 2022 data. We also expect that it will continue to reduce the value of the bonds that insurers hold in their portfolio. But at the same time, this changing environment also creates opportunities by giving insurers the opportunity to invest in newly issued and higher yielding bonds. And for those operating in the life insurance sector, this environment could reduce the value of their long-term liabilities. Next slide, please. Now you can retrieve all the data I showed you today in our report, which is accessible on our website for free in a PDF version, but also in an Excel format for all the tables and charts. You can find longer time series in our OECD Insurance Statistics Yearbook, but this is a publication. If you want to access databases, you can look either at our data portal where we have selected indicators on insurance. And next slide, please. If you want to access all our data on insurance, I would recommend you to go to our online database, OECD.stat extracts. Next slide, please. Which is here. You can see just a snapshot. Next slide, please. To conclude my presentation, and if you are interested to know more in details about what happened in the insurance industry, you may be interested in some of our analytical work. We had some further analysis on COVID-19 and also on the war in Ukraine. We have also some specific analytical work on some lines of business like long-term care and healthcare insurance. We also have some work on cyber insurance, and we also have an area of work on disaster risk financing. You can retrieve all this work and more at the link at the bottom right of this slide. And finally, this is my last slide. Next slide, please. I said at the beginning that the committee I'm serving also work in standard setting, and we have a few documents that you can access at this link in these slides. I'll stop here for now. Thank you very much for your attention.
Thank you, Roma, for the insightful presentation on the global insurance market trends. And we will now open up the floor for question and answers. And I will ask help and guidance of Ersin Bey to run this session. And 40 years of data for over 60 jurisdictions, we would like to appreciate your efforts on contributing to the evidence-based policymaking in this area and all the deliberation platforms that you are establishing and running. Thank you very much, Roma. Ersin Bey, please.
So, thank you, Serkan Bey, and thank you, Roman, for the insightful presentation. Actually, maybe before the Q&A section, I do have one contribution to your presentation. Actually, at the beginning, you mentioned about the negative real growth rates in Turkey, both in the non-life and the life sector in 2001, in 2021. Actually, the reason was, as you said, inflation. But the more important part is we see the inflation going up at the end of 2021. So the inflation suddenly peaked at the end of 2021. So the insurance companies mostly responded this next year. So there is a lag between inflation and the price changes in the insurance industry. That's why you see such real negative growth rates in 21. This picture totally changed in 22. I think in your next report, you will see a fantastic positive growth rates, real growth rates, especially for the non-life. Non-life sector growth 130% in 2022. So, and in real terms, I think this is like 40-50% growth. So that's mostly due to the lag. So I am also checking if there is any question coming, but maybe I start with the question. So you also mentioned there are some COVID effects in the P&L of insurance companies. I think some of those impacts are, I see it more one-off during the pandemic period. But besides this, do you also see some permanent impacts for the insurance companies due to COVID, due to this pandemic? So do you think there will be some impacts remaining in the insurance companies? I think both, maybe this is a question from insurance company perspective, but also from the customer perspective. Would you think that there are some permanent changes in customer behavior as well after this pandemic?
Thank you very much for this very relevant question. It's true that we anticipate the COVID to have an effect on the customers and industry beyond 2020 and 2021. One of the first maybe effect on the customer would be probably a change in perception and potentially an awareness of the need of some health insurance coverage for any potential risk that could affect their health in the future. In terms of the insurance industry, I'm sure COVID has had an impact in particular in terms of wordings of some of the policies, because before the COVID-19 outbreak, while there was some exclusion in the policy of the pandemic or health, whatever happened to health, on the claim payments from insurers for instance, business interruption, there were some parts of lack of clarity, and this is why there were some judgments and courts intervening to specify whether the insurers had to intervene or not to cover some of the costs of the businesses. And this may, going forward, lead to more precise wordings of some insurance policies. And finally, a point which I would like to make about the effect of COVID on the industry is probably the faster digitalization. Because as customers could not go and see their salesperson when they were obliged to stay at home, this has led the industry to further develop their IT and technology. It's also work as well for the operation of insurers and their staff, and also the communication they could have with the supervisors. So I believe the pandemic has been a catalyst for digitalization.
So thank you, Roman. I think the one other question would be, I think you mentioned at the end of your presentation about the changes in economic environment, inflation, and on the other hand, interest rates. So inflation definitely has some negative impacts, as you said, increase in claims cost. But on the other hand, increase in investment income, in investment rates, I think is positive in general for life insurers, especially for the future new business. I think there are some positives and negatives about this inflation interest rate discussion. So how do you see that when you combine all these effects, inflation and interest rate changes? The insurance industry will benefit from this, or will come out, I don't know, as a negative impact?
Thank you. Excellent question again. And I look forward to seeing the effects in the data. While I can't reply as such without the data, because as you were mentioning, in fact, inflation is playing in many different ways on the operations of and activities of insurance company. Because as you were saying, in the non-life sector, this will increase likely the claim costs. It will also increase probably the operating expenses of insurers if their staff salary increase. And the question is to what extent insurers will pass this kind of increase to customers through an increase in premiums. Then, if you see a rise in terms of premiums, how will customer react to that? Will they continue to have a policy? Will they surrender it? So you don't know what this could have as a spillover effect on the customer. As you were saying, inflation could also be favorable for life insurers in terms of their liabilities, which will reduce. On top of that, they may have also now new possibilities to invest in higher yielding bonds. We have been talking for ages about being in a low yield environment and all these complications, these triggers for life insurers, but now we are seeing the opposite. So as you can see, there are many factors playing out, And I'm curious to see the trends in the insurance sectors in the different countries that we monitor and see what factor was predominant in the end in each of these countries.
So thank you. I am curious as well. So let's see how it will shape up in the coming years. Maybe one final question for this section is, what do you think about the future of motor business? You know, now with the self-driving cars, all these automation discussions going around, maybe we will see that human is not driving any more cars, maybe in 5 or 10 years. So how this would affect the motor insurance, or do you think that it's quite early yet still, or do you think this is happening? This will be happening maybe in the next couple of years.
Oh, that's a very, very difficult questions. Very interesting. No, the thing is, I'm sorry, I won't be able to answer that one, but definitely for this type of, analysis of potential impacts in the future, we definitely need some insights from the industry and as well from experts in each country. And I'm glad that we'll have some insights about Turkey later on during that presentation.
Yeah, I can only comment that there are some expectations now with this change, thinking about the self-driving car. Actually, now the fault in an accident will not be with the driver, but with the manufacturer of the car, most probably. So this would most probably shift the insurance from drivers to the car manufacturers, so kind of a product liability type of stuff. So I don't think when this would happen, but definitely I think in the future we will be talking about more about this product liability stuff of car manufacturers. So this is our expectation, but I don't think this will be happening very quickly, but maybe in the next 10 to 20 years. So thank you, Roman. I think we can shift to our next section. Serkan Bey, I leave it to you.
Ersin Bey, thank you very much. The last question was really hit. It's such a multifaceted question and dilemma. Like even the infrastructure providers, municipalities and government authorities are going to be responsible of providing some of the aspects of it, and the success and precision working of those infrastructures are going to be also important in assessing the liabilities. So that's a very good question that we are curious about too, and intersecting many industries and many offices of the private sector and the government. Thank you very much for this session and perfect questions. And now we are going to proceed to the second session. Again, Roman, I would like to give the floor back to you, and we will continue this session with the Pension Markets in Focus 2022 report. And I would like to remind everyone that the special feature in this year's edition looks into the potential impact of the Russian-Ukraine war on pension markets. That's an addendum that we are adding to all of our analysis in most sectors, in most industries, because that's a really big impact to the way of doing business in all industries. And for those of you who have joined just now, we are discussing the latest trends and developments in the insurance and pension industry globally and in Turkey. And Roma's presentation on pension markets in focus 2022 will provide us with valuable insights into the current state of global pension market. And we also encourage you to channel your questions via our interface, and many questions are already flowing. So without taking too much of your time, please, Roman, take the floor and present the next presentation of yours related to the very valuable report of yours.
Thank you very much again for the opportunity to present now this report focusing on private pension market in focus 2022. The outline of this presentation is similar to the one on the insurance report. Next slide, please. And I will move very quickly on the background of this work, because it's more or less similar to the one on the insurance side. This report on private pension is carried out under the aegis of the Working Party on Private Pensions. The members of this working party are pension regulators and supervisors, and their aim within this working party is to examine how funded and private pension systems contribute to delivering adequate retirement income and how they manage the risk involved. The data collection is again one of the core activities of the working party. And to carry out this work, we have a sub-body helping the Task Force on Pension Statistics. What is noteworthy is that we are carrying out this data collection in collaboration with the International Organization of Pension Supervisors and the World Bank, and this allows us to cover around 90 jurisdictions worldwide. Next slide, please. We have also around 20 years of data now, and we cover many aspects of private pensions. We collect data on assets and liabilities, the asset allocation and investment performance, the contribution to pension plans, the benefit these plans pay, their operating costs, and we also have some membership data. We collect very disaggregated information by type of financial vehicle, like pension funds, pension insurance contracts, and so on. And we also collect information by type of plan, occupational plan or personal plan, defined benefit plans, or defined contribution plans. We also collect the data in 2 stages. And what I'm going to present is the latest release, which is the full report with data going up to 2021. Next slide, please. So if we now go directly into pension market in focus, just to quickly remind you of the scope of the report, it's all the funded and private pension plans, whether they are financed with a pension fund, through a pension insurance contract, or over vehicle. And they can be occupational or personal, defined benefit or defined contribution. As long as they are funded, they are in the scope of our reports. We also cover book reserves that some employer may set aside to cover future payments of pensions. And these types of plans are, for instance, widespread, or at least exist in Germany and Austria, for instance. What is, by contrast, left outside of this report are all unfunded pay-as-you-go pension scheme, even if they have reserves, and that can make a difference from time to time, because in some countries like the US, Japan, Korea, this public pay-as-you-go scheme have large reserves, but these are outside the scope of our reports. Next slide, please. As it was said to introduce this report, there are 2 main parts. One is an overview of what's going on in the latest years available, and the other one is a special feature focusing this time on the war in Ukraine. But I will start first by the first part, giving an overview of retirement savings worldwide. And what we can see from this map is that the amount of retirement savings varies widely in US dollars around the world at the end of 2021. The largest pool of assets could be found in the US and Canada, but also in Australia, Japan, the Netherlands, Denmark, Switzerland, and the UK. And assets in all these countries exceed 90% of all OECD pension assets in US dollars. Next slide, please. But when we take into account the size of the economy to look at the proportion of savings, we can get a slightly different pictures. And now we see that the amount of pension assets relative to the GDP is the highest in 3 European countries, Denmark, the Netherlands, and Iceland. And in these 3 countries, the amount of assets exceeds twice the GDP of the country. still, even when taking into account the size of the economy, we can see that in many jurisdictions, the amount of private pension assets is still relatively small. And just to give a few examples, like for instance in France or in Greece, but you can see there are many countries in light blue in these charts. Next slide, please. Yet, private pensions can be expected to play a more important role in the future in the overall pension system because assets in private pension plans have been growing over the last decades. And this despite the several crises that could have affected the sector and other sectors. You see there was an overall upward trend despite the 2008 financial crisis, despite the sovereign debt crisis in Europe in the early 2010s, despite the Brexit deal, despite the trade war between US and China, and even more recently, despite the COVID-19 crisis, assets have never been so high, and they reached around $60 trillion at the end of 2021. This is in current prices, but even if we had taken into account inflation, we would have seen the same upward trends. Next slide, please. And there are several factors behind this continuing growth of pension assets, and this slide gives three of them. The first factor behind the growth of assets is that there are more and more people having a pension plan. Over the last decade, this is due to the introduction of new mandatory plans like in Israel or automatic enrollment program like in New Zealand in 2007, in the UK in 2012, in Turkey as well. It was phased in from 2017 to 2019, depending on the size of the company. Poland has done something similar a little bit later. Lithuania has also introduced automatic enrollment. This is a trend we are seeing in more and more countries. We have also seen some countries expanding the eligibility conditions to allow more people to open a pension plan, like in Korea, where it's now possible for self-employed or workers with less than 1 year of service to open individual retirement plan. And finally, countries can be using as well financial incentives to encourage people to open a plan and save for retirement. In 2021, and despite the COVID-19, which could have some lingering effects, there were still more people having a pension plan as more and more people were having mandatory or plan they join automatically through their workplace, for instance. But there were also some job retention schemes still happening in early 2021 to cushion the impact of COVID-19 on labor market and to enable people to keep working and keep opening and saving in a pension plan. A second factor behind the asset growth is also the growth in the amount of contribution, because more people have a plan, but also because some countries have been increasing the minimum mandatory contribution rates, like in Australia, and this increase is going on until the contribution rate reaches 12% in Australia. New Zealand has also increased over the year the contribution rate, and the UK as well, for both employer and employee. And again, financial incentives and non-financial incentives can also boost voluntary contribution, and Turkey is itself using this kind of incentives to encourage people to contribute. In 2021, the improvement of the employment rates and also the job retention schemes probably help to support the contribution payments, and in some cases, contribution resumed after a stop or a slowdown in 2020, like in Australia. And another and last factor I want to touch upon behind the asset growth is the investment performance and the investment gains, and pension providers have managed to reap nominal investment gains in the financial sector over the long term, despite the financial crisis. And in 2021, they benefited from buoyant stock markets. Next slide, please. In 2021, in almost all jurisdictions, the investment rates of return were positive for pension providers. But as I was already mentioning in my previous presentation for insurance company, likewise, inflation was already starting to eat in the pension sector as well, and it has turned some of these nominal investment gains into losses in real terms in 10 OECD countries and in 18 other jurisdictions. And Turkey recorded one of the strongest nominal investment performance in 2021. But if you take into account the inflation we have already mentioned, it becomes one of the highest loss in 2021. However, what we keep repeating at the OECD is that saving for retirement is for the long term, and what matters the most is not the short-term performance on financial markets in a given year, but rather the performance over a longer time period. And what we notice is that over the last 10 years, 41 out of 44 reporting jurisdictions recorded positive investment income in real term, and 16 out of 18 jurisdictions recorded a positive investment return in real term over the last 20 years. Next slide, please. We also look in our report at the asset allocation of pension providers, and like for insurance, bonds represent a significant part of the portfolio of pension providers, together with equities. The two bonds and equities at the end of 2021 accounted for more than 60% of the assets of pension providers over a selection of 16 jurisdictions, for which we had the whole time series of asset allocation. And what we have seen over this 16 jurisdictions was a shift away over the last 20 years from bonds towards equity and other alternative investment. And that could be because of a potential search for yield, as over the last two first decades of this century, the interest rates were falling and were low for quite long, even if this is currently changing. Next slide, please. We have also seen over the years an increase in the proportion of assets that pension providers invest abroad. This increase happened in 17 out of 20 reporting jurisdictions over the last 10 years, and in 32 out of 38 reporting jurisdictions over the last 20 years. And one of the potential reasons could be, again, this search for yield and for investment opportunities, but it could be also a way to mitigate the risks. This increase in investment abroad could also be due to the lifting of investment restrictions, like in the case of Peru, for instance, which had an automatic effect on the proportion of assets that pension providers invested abroad. Yet, as you can see on this slide, the behavior of pension providers towards foreign investment vary widely. Those investing the most abroad are basically pension providers in the euro area with small markets, but we can see in many countries a relatively small share of assets invested abroad. And in this country, pension providers tend to favor domestic investment instead, and you can see, for instance, Turkey. This is the case in Turkey. Next slide, please. We looked at other trends over the last 2 decades. One of the well-known one is the shift from defined benefit plans towards defined contribution plans, which we noticed in our data. Even if defined benefit plans stay prominent in some markets like Finland, Switzerland, also the Netherlands, which is not on this slide. But there has been a shift away because of the cost of this plan for the fund and the sponsor who have to guarantee a benefit promise to members, and that had been more difficult with the falling interest rates in the last two decades. The thing is, we speak about these two main categories, defined benefit and defined contribution plans, but there are many other type of plans or plans with different set of features. For instance, in the Netherlands, there has been a shift even within defined benefit plans from final salary plans towards career average defined benefit plans, which may be less costly for employer. I think Canada had the same kind of trend. And also within the defined contribution sphere, we have noticed some providers moving away from DC plan with guarantees towards plan with no guarantee, as it's less costly, and there is not a promise that could be hard to meet. And this happened, for instance, in Denmark. Next slide, please. When you look at defined benefit plan, one of the key indicators you could look at is the funding ratio. It's the measure of the proportion of liabilities that assets available can cover. And this is a very interesting indicator. Unfortunately, it's not easy to compare it across countries because countries could use very different methodology to calculate it. They could use different valuation of assets. They may treat the current members of a plan and future entrants in a different way. They may also use different discount rates to value the liability, from a risk-free interest rate to an expected rate of return. And finally, the mortality tables they use may take into account future mortality improvements in different ways. So all this make cross-country comparison unfortunately difficult. Yet, if we look at the trends in other countries, we can see that there has been some fluctuation over the last 2 decades. But what is common is that in 2021, the funding ratio improved in most countries, probably because there was some expectation of a rise in interest rates because inflation was already starting. And we can see that in 2021, among the countries available on this slide, there were 3 where the funding ratio was below 100%, the US, Mexico, and Iceland, which means that at the end of 2021, the assets in DB plan would not have been enough to cover the present value of the liabilities of this plan. Next slide, please. For defined contribution plan, a thing which matters is fees. Fees that members pay, and this information is important because fees eat the amount of assets that members accrue, and this can ultimately reduce the amount of benefits that they can expect at retirement. There are many ways these fees can be charged by pension providers to members. They could be charged on contribution of employers or employees. They could be charged on the pension pot directly. They could be charged on the investment income, or they could be charged at the time that members withdraw assets from their pension plan. And what we see is that in most countries, the fees that pension providers can charge on members is capped. And next, please. And usually, pension providers use fees on assets to cover the service they provide. Next, please. And the thing is, fees are difficult to compare across countries because fees may cover different levels of services. In some countries, for instance, pension providers are not allowed to do some marketing of their products, while in others they can. So in countries where there is no marketing, there will not be any marketing costs. And another reason why cross-country comparisons are difficult is because of some hidden charges that national authorities may manage to capture to different extents. Next slide, please. Given the impact that fees can have on the assets accumulated by members, there have been many initiatives to reduce this fee from national authorities. One of this initiative was to set cap, as I mentioned already. Some countries have been reducing the cap on fees that pension providers can charge, like in Costa Rica, Estonia, and Mexico over time. Some use another technique and they ask pension provider to reduce the fee they charge when their asset under management increase, like in Estonia, Latvia, and Poland. Some jurisdictions like Czech Republic and Lithuania have lower fee cap for more conservative options. And other techniques to encourage a fee reduction is, for instance, a heat map that Australia produces to highlight pension providers with the highest fees. And two jurisdictions like Chile and New Zealand have auction mechanisms that are based on fees to select the default providers. And the provider winning the auction can have lower fees than others. Next slide, please. Very briefly, as I said at the beginning, the report has a special feature focusing on the impact of the war in Ukraine on OECD pension providers. Next slide. And what we could see already in early 2022 was that pension providers were experiencing negative investment performance, both in nominal term and real term, and the largest pension markets were recording a decline in assets. At the same time, we also noticed that the liabilities had been falling even further than assets in Canada, Netherlands, and the US, leading to an improvement in the funding ratio of DB plan in these countries. Next slide, please. And the war in Ukraine has definitely probably played a role in that. Not so much by the amount of Russian assets that pension providers may have had in their portfolio, because usually before the war in Ukraine, pension providers at the OECD had very little exposure to these assets, less than 1%. The impacts of the war may be rather on the stock prices of companies operating or trading with the region or in certain sector like defense. And definitely the major channel would be the indirect one through changes in the macroeconomic environment with inflation, rising interest rates, and lower GDP prospects. If you go to the next slide, please. We have done further work after the release of our report on the potential impact of inflation on pension providers and members. You can see that on this slide. For the sake of time, I will move to the next slide, but I'm happy to discuss this further during the Q&A session if you are interested. Next slide, please. So you can find all the statistics that I've presented today in the Pension Market in Focus report, available for free in a PDF version, and all the data are available in an Excel format. You can also access the data in our data portal or in our full online database, .stat extract. Next slide, please. And if you are interested in all the work that the private pension unit is doing at the OECD, next slide, you can see some references here. Some of our flagship publications include the OECD Pensions Outlook series, with analytical work published every 2 years. We have some also monograph, one on mortality and the provision of retirement income, one specific to COVID-19, one about financial incentives, and we have two key recommendations, the OECD core principles of private pension regulation and the OECD recommendation for the good design of defined contribution pension plan. All our work is available at this link below, and I would like to thank you very much for your attention, and I look forward to the discussion.
Roma, thank you very much. It was a very explanatory presentation. Now I'm just checking the questions, whether they're addressed in the presentation or not. Most of them are really covered. If I may have the liberty to combine some of the questions with the permission of our audience. While looking at all these comparative analysis, probably in the last decade, decade, many OECD countries are making progress in this field, and they have many reforms or standalone interventions to improve the markets or how the markets are regulated. Can you just point out few of these reforms that you recommend that we should really keep in consideration or consider as best practices? Though we are always putting some reserve on the applicability of the best practices in another country's settings, but if you can just point out some good improvements or recent reforms in other countries' sectors and industries, we would really appreciate your guidance on this one.
Thank you for this great question. The thing is, with pension policies, you can achieve different objectives. So it really depends on the objective you have with your pension reform. But let's say that if you want to increase the coverage of private pension plan, if you want to have more people
Yeah,
having a pension
that is
plan,
one of the applicable issues in Turkey as well, the penetrations. So that is the point. Thank you very much for pointing that out.
Exactly. One of our recommendation is that usually making the participation in a pension plan mandatory is the most effective way of having the population, the working population covered. Basically, all the countries with this type of feature are those with the highest proportion of people having a plan, except maybe those where informality is pretty high. The thing is, we are very much aware that making participation in a private pension plan mandatory is not feasible in all the countries. And this is why, in our opinion, the second best option would be to use automatic enrollment, uh, counting on people's inertia to stay in the plan once they are automatically enrolled, for instance, by their employers. And many countries, and several countries have used this approach. New Zealand, it has been pretty successful in increasing the coverage rate, the UK as well. And we have seen that Turkey has followed this road as well with the introduction of automatic enrollment in 2017. But you can use also other techniques to encourage people to save, financial incentives. You have a set of tools to make people participate in private pensions.
Okay. Roman, thank you very much for all the information you have provided in your really detailed presentations. We are looking forward to more data. As more data becomes available, you are going to prepare the updates of your reports and we'll be following them. So it was a pleasure having you today and hear your insights about the future of the industry also. Though they are interim comments with the lack of the most available data, these highlights and insights are really valuable for us. Thank you very much, Roman.
My pleasure. Thank you.
And now, before transitioning to what's happening in Turkey and receiving the expert opinion of Ersin Bey, Ayşegül Hanım is going to give you a brief introduction to our agenda in the Insurance and Pension Working Group and what we are following and what we are observing in this one. Ayşegül Hanım, the floor is yours.
Thank you so much. Good afternoon, everyone, again. And it's an honor to be speaker today and share findings with you. But as these previous speakers have highlighted, the insurance and private pension sector in our country is vital, growing industry, plays a critical role in both the financial and social well-being. And in our working group, we are monitoring some key metrics to understand what's going on and to develop some evidence-based policy-making efforts actually at the end. And as of today, we will look at some tables, figures, and the other things to short in the short term. And next slide, please. In this first table, actually it's like a summary table, and in this table, when we check one by one, actually in Turkey, in the case of the number of companies, including life, non-life, reinsurance, and pension actors, there are 67 companies operational. In the case of employment, there's an increasing trend over the years, and today the sector, like the sector including both pension and the insurance part, employing over 22,000 people, and actually it's managing assets worth 781 billion liras. In the case of premiums of life and non-life segments, 30% growth was recorded in the last year in real terms. This is a strong growth, and as Ersin Bey earlier said, it's a turning point, like it's an increasing point in Turkey in the case of the performance with the comparison with the earlier years. There has been a consistent increase in the number of policies over the years. In the last year, there were almost 82 million policies with an increase rate of 11% in comparison with, again, the previous year. In the case of the pension side, the fund amount has reached 454 million TL as the end of the March to like in this year. And in the last year, again, there was a positive growth in real terms, and it was 2.9%. In the case of participants in the pension system, the number has almost reached 15 million, and there is a positive growth again in that metric. As these figures highlight the scale and importance of the sector in Turkey, in next slides we will look the working group position in the sector. Next slide, please. In this one, we have two figures, and let's start with the first one in the upper side. It represents number of firms, and considering the breakdowns, the types, like in fact, we have 3 reinsurance firms and 44 non-life firms and 20 firms in the case of life and pension segments. In total, there are 67 firms. In fact, 40 of them have international investments. In the second graph, we have the similar layout, but with the information of asset size. In the first one, we have the same layout, but with numbers, but in this one, it's the asset size, representing size, actual size of the companies. And in fact, again, we are seeing international investors account for 56% of the sector's total asset size. And actually, it means that the sector in Turkey has somehow part of global know-how in the finance part. And also, I would like to draw your attention to Asset Working Group share. It's actually this working group has been operational since June 2012, but at the end, it's a sub-working group under the finance. But in this year, it's a separate working group, and this group represents a significant portion of the international capital in the sector. It's 74% of the international capital. In the case of the total asset size, without checking the international or domestic, the asset working group represents 42% of the total sector in the case of the assets numbers. And as we move forward, we must acknowledge that the importance of the international capital in the sector's growth and development, it's not just specific to Turkey, but it's a global know-how, and it's integral part of the global financial know-how. And in the next slides, we will look at, like, when we are talking about Turkey, there is a growth figures in 2000, like the last year, and its growth figures also continues in this current year in the considering first 2-3 months data. But we have to consider Turkey's overall potential when we are saying it's a growth. And in this slide we have 2 figures, and actually they are similar layouts. What one metric is changing. In the left-hand side, we have 2 indicators. On the y-axis, we have insurance companies' access to GDP, and on the x-axis, we have GDP per cap as an indicator of economic development. Each dot represents a country which we can have the data, and the coloring represents income levels. First of all, I would like to take your attention that there's a correlation between 2 indicators. So we can say that if a country like the GDP per cap increase, most of the time the insurance sectors, the share of the insurance sectors within GDP increases. And even it's not a causation, it's a hard thing to say without any further analysis, but at least there's a correlation, we can say. And furthermore, we see that insurance companies, actually as a measure of the sector's size, is still relatively low in Turkey. It's like, as you see, it's like at the bottom part of the graph. Like it's very very low. Even it's low among its peers in terms of the upper middle income countries, other upper middle income countries. And similarly, on the right hand side, we have a similar layout. As I said, not the pension assets, but yeah, instead of insurance assets, we have now pension assets, like the asset size of the pension companies. And the finding is actually the same. There is a correlation. Turkey has a very low, relatively low share in terms of with respect to its GDP. And in addition to growth potential, we have two messages from that graph. Uh, these analyses show, these basic analysis show us a country continues to develop and grow. The insurance and private pension sector will continue to play an increasing important role in driving these development and growth. And Turkey, there is a ample room for that. And now I would like to check the next slide and the sub breakdowns of the sectors. Next slide, please. In the next slide, in this slide we have, like, when we are talking about the insurance, like what are the products in Turkey when we are talking about insurance? It's growing, decreasing, but which products? What is people are using or not at the end? And in this slide we have three graphs, and on the left hand side we have actually insurance related graph, and it reflects in real billion TL, and there's a growth as we said. It's there's a like a difference among the 2 years, but there is a growth. We know that. But even there is some diversification. There are some products very common, and the first one is compulsory traffic insurance, and the second one again related to traffic, but not the compulsory one, but the motor own damage product. Then we have life, health, fire and disasters, and it's going on. But the majority of the insurance products are actually related to automotive sector, so we know that. Even there is a diversification still. So actually, when we are checking these product-wise like baskets, we can say that there's a very low level of penetration for many products in Turkey in the case of insurance. We are only insuring our cars, not houses, not for earthquakes, as in the case of DASK in Turkey. It's a earthquake specific product, and we are seeing that it's very low penetration rate. In the right hand side, we have a graph for pension side, and in Turkey we have a private pension. It's it started early in 2003, and in a most like early, like not most early, but in a recent years, not so much recent, 5 years maybe, and we have automatic enrollment system, and at the end we have like it's there's a like a trend going upwards, and at the total it's reach almost 15 million people. Again, considering the all population, working age population, it's still very low, but an increasing trend, at least we can say, due to the thanks to the reforms maybe, and the activities set. And at the bottom side, we have the again the pension specific graph, but including the monetary terms. It reflects the nominal billion TL. It's an increase and considering the inflation again, but at the end, still the normal private pension part plays a huge role, but there's automatic subsidies part also in Turkey in the case of total asset size. At the end, in the considering number parts, it's almost reach, let me check the number, like 454 billion TL in Turkey. It's a huge number. Also, it's important to highlight that for some listeners not accustomed to pension systems, it's important to have this much pension amount, since it provides long-term finance in the country's financial sector. It's also source of financing the governments, because it buys bonds and other public finance tools. So it's very important to deepen the finance sector also in Turkey. And let me continue with the next slide, please. In this one, like we check the like basic things. It's not very large presentation, big presentation, but somehow we try to reflect some critical points. In this one, we just try to give an example about the future trends, why we are talking about future trends. In this specific graph, we just try to highlight the importance of including the aging population trend in insurance and pension sector. In fact, let me try to give some figures. Like it's not just one trend, but an important trend Turkey will has to face. The proportion of the population in Turkey by age group is expected to shift significantly over the next few decades. The similar trend is actually happening in the EU or like the developed OECD countries, and it will happen also in Turkey. There is a time gap between these countries and Turkey. Turkey still has somehow have a window of opportunity regarding its population age group, but again, it will happen in Turkey also. The projections are showing that, and it will change the demand for insurance and pension products. We can expect that. In the case of Turkey healthcare part, the health insurance part, there is a major trend in the last years. Complementary to health insurance has already seen widespread adoption in the country. In the upper hand side graph, we are seeing that it's without getting a share from the other products, it became a new product and add up to the old base. But with the aging trend, it's a new trend, and we have to consider all these products again. Like we have to maybe redesign that, but not just the product, but it has some part of an ecosystem design, and actually in the case of aging trends. So we have to think that what types of long-term care and healthcare insurance products do private sector companies need to offer to meet the needs of consumers? What are some examples of these products? Are like any critical questions that we need to address before designing these products? Also, we have to consider like what should be the different points from these new and existing common products, and why we have to take them. Like what is the proportion for the next years? What will be the market size for the next years? And but at the end, we need to think about the regulatory aspect. Like it's a new trend, it's happening in the other countries also, but Turkey has to need some arrangements for the development of these new area, because people are aging. It's not for market oriented demand, but it's customer oriented demand will be there. So private sector and public, the regulators has to develop effective products and ecosystems before the change start to happen. And in conclusion, as we navigate the overall insurance and private pension sector in Turkey, it is vital to remind that like there's emerging trends, and we like even there's a huge growth in Turkey recorded in the last years, but there's a very big ample room for further growth. There's like we need to increase the penetration rates considering these emerging trends. So thank you for all your attention. I hope you found the information and this analysis informative. I will now like to return the floor back to our moderator. Thank you.
Ashkelon, thank you very much. Just to point out two important points: the versatility of the pension funds, that they can be resources for high yield, high importance, and innovative sectors of the industry. So whenever we talked about the startup environment, whenever we talk about the green transformation, whenever in any area that we require big scale funding, these are the very important resources. So thank you for pointing this out. And also aging is on the horizon. So now it is time to hear Ersin Bey. Ersin Bey, to begin with, thank you you very much for connecting us to the sector, to the regulating authorities, to the sector associations, and creating this deliberation environment for all of us to increase our know-how also. We are looking forward to hear your expert opinion about what is going on in Turkey and what we should expect from the future of the industry.
So, thank you, Serkan Bey, and once again, good afternoon to all. Actually, I would like to start with my thanks to Ayşegül Hanım and Serkan Bey for organizing this event and inviting me to speak on the latest trends and challenges in the pension and insurance industry in Turkey. Actually, now being more than 20 years in the insurance and pension industry, I had the opportunity to see many changes in Turkey, but I can easily say that I have never seen such a period with massive changes all happening at the same time. Some of them are driven by technology, some of them are driven by regulators, and some of them are driven by customer changes. So I have no slides, so I will try to quickly summarize what's happening in Turkey. So I will speak in three dimensions. So first I will touch into pension, then go into health, and finally finish with the property and casualty insurance. So let me start with what happened in the pension business in Turkey in the last couple of years. I think this is the area where we had seen many changes, and I can easily say that all is mostly in positive direction. So what we have seen is the system was open to people below 18 years old. It was almost 1.5 years ago. And then the state contribution was increased from 25 to 30%. And recently there is a new change which enables pension funds to be counted as collateral to the credits in the banking system. So I see all these changes in the positive direction. Just looking at participants below 18 years old, I think the total number reached to roughly 700,000 as of today. Total number of customers in the pension system is about 8 million. So Ayşegül Hanım mentioned about 15 million. So adding up the auto enrollment, which is around 7 million, brings us, roughly speaking, to 15 million people. And when we look at the assets under management in pension system, it has exceeded 400 billion Turkish lira. So roughly speaking, we are talking about more than $20 billion. So I think compared to what Roman presented to most of the OECD countries, I think still we have the way to go, but I think we should also not underestimate what we have done so far. And government strongly incentivizes the pension system. And I think in Turkey, the biggest need is the institutional long-term investors. And definitely pension funds here play very, very key role and very important role. So I think the pension funds and the pension system in Turkey will continue to grow. And I also see that there is an increasing trust in the population to the pension system. At the beginning, there were some hesitations about the pension fund returns being below inflation, etc. But last year, we have seen that record returns in the pension system, even passing above the inflation rates. I think in overall, I see this very positive trend, I'm very optimistic about the future of pension business. So from here, maybe let me quickly summarize also the health insurance, what's happening on the health insurance. Again, Ayşegül Hanım mentioned about the complementary health insurance, I think which is the growing engine of the health insurance at the moment. In the past, health insurance was stuck to more into high-income people. Now with the complementary health insurance, there is more and more penetration going into middle-income segment item, which is good for the insurance industry itself. but which is also good for the social security system. As you probably know, like in many countries, social security system in Turkey is giving significant high deficits, which is subsidized by the government budget. And I think here now with the increasing complementary health insurance system, we need a type of a redesign in the healthcare system. This, I think, from my perspective, it should include both the social security system, so the coverages in the social security system, but also the role of private health insurance going forward. And maybe one important dynamic, again, Ayşegül mentioned about the aging, and definitely Turkey has a much young population compared to Europe. But again, this should not avoid us thinking about aging. Definitely the Turkish population is aging as well. As of today, people above 65 years old constitutes almost 10% of the population. And this is projected to go up to 13% in 2030 and 23% in 2060. So we will see more and more aging. And definitely this aging brings some diseases as well in terms of chronic conditions like diabetes, heart disease, cancer, etc. And these all would require some treatments, which would most probably, the treatment costs will go up as well in the future. And this again brings me my conclusion that we need to redesign the healthcare system in Turkey together with the social security system and the private health insurance. And let me finally on the health insurance system mention a little bit what is happening new as the health insurance industry. So the first thing is we see more and more preventive healthcare measures are being both demanded by the customer, but also being served by the insurance company. So at the end, it's the benefit of both parties. And in addition to that, we see again more and more telehealth and remote healthcare services. These are expanding. Still, the rates are very low, but definitely will expand more. And recently, there has been a regulatory change as well on these remote healthcare services. And finally, home care and hospice care with the aging, I think we will need them more. And this would also bring new type of products into the market. It's not the ordinary health insurance product, but maybe we will be talking about more about long-term care products, which do not exist in Turkey at the moment. So finally, maybe a few words very quickly on the non-life P&C market in Turkey. Definitely, this business line is much more challenging compared to health and the pension, especially for the insurance companies. Due to some market dynamics and regulatory restrictions, it's almost impossible to run the business on a sustainable way. So many companies are having difficulties to run the business in a healthy way with also meeting the solvency requirements, etc. But having said that, I think we have recently seen in the devastating Maraş earthquake as well, there is a potential in Turkey. So Turkey at the end is a cat country, and we have to live with it. Earthquake is one of them, but we do have other cat events as well. And looking at the penetration is very low in such cat country, I think is not acceptable. So we will see more and more penetration going into insurance, also in the property business. Actually, we see this just after the earthquake. there is more and more demand coming, but I think we should have to make it permanent, not just after the earthquake. To summing it all up for all business lines, I think there is a strong potential in Turkey for the insurance business. And the insurance companies have to be agile, innovative, and customer-centric enough to really adapt these new trends and also try to deliver value to the all stakeholders. So coming to the end of my words, again, I would like to thanks again for this opportunity, and thank you for listening.
Trends and innovation you and Roma mentioned, we believe that the sector will stay active in the incoming years, and there's much to do also in the Turkish environment. And considering all the international changes, disasters, the risks associated to the way of doing business in the world, we see that everything is prone to crisis and risks. So we understand this sector is a mainstream sector that is really important for a healthy development and continuation of the economy. So we really thank you for your efforts, for providing some security to our daily operations and livelihoods. And we will be following up with all the new research, including the ones that Roma mentioned in his presentations. And thank you very much for all the information you provided, Roma. In your interfaces, there's a folder icon that you can download anything that is presented today. Please do so. We are going to keep the interface open for a while so that you can download them. And thank you very much, Ayşegül Hanım, Roma, Ersin Bey, for all the information you provided today. We'll keep in touch and bring more updates to our member base and stakeholders in this sector. Thank you very much. Stay healthy.
Thank you.
Thank you very much.
Thanks so much.